what is that one thing you'd like to see the government do?
I think the policymakers anyway have been proactive with regard to food price management. They already have just taken away. I think an hour ago there was a flash which was saying that the edible oils duties have also been cut. So I think to some extent the government is going to bear the brunt of cutting excise both on petrol and other edible oil. But that again will somewhere impinge their fiscal numbers and again impinge on their ability to spend, especially on the rural sector. But I think from the policymakers' point, since it is a supply shock and it's external shock, as everybody's been talking about, there's little that you can do with regard to managing it, except for probably, giving some tax relief here and there. But again, it will also impinge on your overall fiscal picture, which essentially will again come back from one form or the other in the form of inflation, be it supply side or demand side. So I don't think it is that easily said than done. You can bear the brunt by not passing it on to the consumer to some extent. But even as an economic agent, government is also going to bear the burden of it, which will again, in some way or the other, via a wider fiscal deficit, will come back in the form of inflation. So it's not a very easy answer to say when the inflationary shock is not domestically driven.
Right. Let me go again. As I said, very short comments because I've got limited time. Prasenjit Basu, what is that one thing you'd like to see happen now? What can give the consumer a sense of relief at this moment?
Well, I think it's important for the government to ensure that the fiscal deficit continues to come down. If the fiscal deficit comes down, as it will, given the buoyancy of revenues, then eventually you will see a decline in the whole structure of interest rates. So I think that there isn't a need for the government to always do something. We've got a response from the RBI, which is appropriate. The fiscal position is improving. We are seeing very strong revenue growth. The government has cut the excise duty at the end of October. There's scope for a little further cut, but it's not essential. I think it's more important to ensure that the fiscal deficit declines. And if the fiscal deficit declines, you will automatically get a crowding in of private investment. And there is no fear of stagflation in India. I can assure you that India is now the world's fastest growing economy. Last year, calendar year growth was 8.3%. India's exports have been the fastest growing in the world for the last 16 months. So there is no danger of any form of stagflation. Even in the last month, we had almost 25% growth year on year in exports in dollar terms. So that is a lot faster than China. It's much faster than Vietnam, Korea. Most other countries are looking in some awe at the strength of our economy, and it is currently export-led. What is required, of course, is that the exports need to be complemented with a pickup in domestic demand, and that can only happen if the fiscal deficit continues to moderate and allows private investment to be crowded in. And that is what will happen if the government just stays on the sidelines, allows the revenue.
I'm sorry, I've just got a minute left. That's why very quickly, Sachidanand Shukla, to take off from what was said just now by Prasenjit Basu, that how is consumer demand going to pick up in an environment at the moment where with interest rates high, there's a sense of people at the moment concerned over inflation. So where is consumer demand going to pick up now?
So Rajdeep, if you are trying to raise interest rates aggressively, as the RBI has done, and it will continue to follow through with the rate hikes going forward till they achieve that neutral rate, I think the onus is now going to be squarely on fiscal policy. I think one area that I can probably argue for is doubling down on infrastructure spending as was promised in the budget. And that is not going to be inflationary. That will put some money into pockets in hands that really need it by way of construction jobs, by way of informal jobs. And I think another very important factor related to fiscal policy, Rajdeep, is that the government needs to not only front load spending, but it also needs to remove the volatility in spending. So what has happened over the year and a half is that the government spending has been very, very volatile. And that induces a lot of uncertainty into households and businesses. And the last thing you want from the government is to induce another uncertainty in this environment, which already is very, very volatile. So I would argue for front loading of spending, doubling down on infrastructure spending, and removing the volatility, ironing out that very, very volatile spacing out of the expenditure. So I think that could probably help putting some money into pockets. But definitely, Rajdeep, when you're trying to raise rates and be aggressive, there is going to be an element of sacrifice in India. That sacrifice ratio has been found out to be close to 2 to 2.8. For example, for every unit of inflation that you want to bring down, you might have to sacrifice 2 to 2.8% growth.